Hey everyone, Siam here. So I just wanted to say that this crash that's happening with crypto at the moment is just a tree shake. It is just a tree shake. Nothing fundamental has changed. The fundamentals are very strong. If you look at on-chain analysis, it's just screaming bull, and this is just a tree shake. So please do not tear your hair out. I've been in crypto for a long time, and eventually you will get used to massive crashes, very short, sharp, deep crashes. So I've just gone back in time. I mean, look at this is what, on the daily chart, back to 2012. Look at every single time we've had any major rally, we've always had these big old wobbles. So here, this is mid bull cycle. We had a big blow off, or it seemed like a blow off top from sort of 250-ish all the way back down to 50. A bit of a consolidation, but it was actually a bit of a fake out, because we then rallied on for the rest of the year to brand new highs. And by the way, every time there's a brand new high or a bit of a wobble, there's always the journalists and people go, oh, it's going to end, it's going to disappear, it's a fad. And then what does Bitcoin go and do? Yes, it'll have a consolidatory period, but then it will just blow every hater out of the water. And look, it's very fractal in nature. You'll always get these big dumps, big pumps, big dumps, big pumps, big dumps. And you have the same haters saying, oh, it's going to end. But just look at the price. The price always marches up. So if we fast forward to where we are right now, as you can see, we are just in the middle of a bit of a wobble. That's it. When you look at the base trend line, what's going on here? So we've got something that's looking a bit like this. So are we out of the woods? No, not yet. I think. I mean, there's definitely a clear level here. I think we've also got this level here, which I think around the 40,000 level is very, very strong. Whoopsie daisy. So we've got a lot of space to fall into, but if we get down to especially this bit here, whenever you have a confluence of support, game time. So I am putting my money in my mouth here. $40,000 is the lowest we're going to see in this little short-term wobble. When we get down to this little thing here, watch this bounce hard, very similar to what we saw over here. Also, something else is that you cannot just look at one insular chart. So for example, if you're like me and you're very heavy into time, you can't just look at the time chart. You have to understand what influences time. And it's a lot more than you think. So yes, it's had an almighty liquidation cascade sell-off here. That's only because people that have been levering up all on the way up, the price, well, obviously some whales were sold and it's forced the price down, and then it's just triggered liquidations. And when you're liquidated, when you're doing 9/9s, which by the way I've recommended people to never do, never 9/9. I know there's lots of YouTubers out there showing you how to do it. Doesn't mean you should do it. I've never used crypto leverage. Oh, hey Pips. It's my dog, Pips. You can't be a currency trader and not have a dog called Pips. So, yeah, you can't just look at time. You have to understand what are the main influences. So, first of all, big picture, you have to look at the dollar index. So, the dollar index, again on the daily chart, has been rallying consistently. Rallying consistently, as you can see here. It's just posted a massive double bottom. We've got the bum line here. It Kobo'd off it. So it broke through, kissed off, and then buggered off that bum line. If I just draw that bum line here, there we go, standard textbook Kobo, and it's been trudging its way up. And so basically, if you're having dollar strength, anything priced in the dollar is going to devalue, or is going to go down in comparison to the dollar. So what this means is that recent dollar strength is why stocks had a bit of a tumble. All of the stocks had a bit of a tumble, and they're still looking pretty weak, to be fair. They had a bit of a relief rally over here, but yeah, pretty weak. But because stocks and Bitcoin, or because everything's correlated to the dollar, and stocks, that's one of the reasons why Bitcoin is highly correlated to stocks. So stocks have a wobble, and so Bitcoin falls. It's this isn't hard stuff, folks. And so, as you can see here, we've got a few levels here, and I've said 40,000 is the key one to be aware of. So I see further falling, and also you then have to look at AVAX. So there's a huge amount of AVAX in the time treasury. What's AVAX doing right now? Well, it's actually resting. Well, actually, it was resting on this base support. What's it done right now? It's smothered the shit out of it, and it's going to fall, as I've called out many times. And so, pips, this is really not the best timing. So AVAX is looking pretty weak. My dog is ridiculous. Yeah, so we could have a bit of a relief rounding back up to 84, but either way, AVAX is looking weak, and therefore time is looking weak. And so, yeah, this is really turning out to be like Ohm. Again, I am an Ohmie. I consider myself an Ohmie, even though I've been out of it for a long time. So yeah, I got out at 950 up here, but like with my 6-6ing sidestepping strategy, you don't get back in until you breach this level, unless you're aggressively trying to increase your token holdings. But what did I say? Literally, I said back when it was around $800 around here, I've done so many videos to my community that the base trend line here is the one that Ohm is going to fall into, and I drew this big old circle a fair while ago, and yeah, that's what's happening. We are now officially sub 400. So Ohm will be a really good buy at about 350, around this sort of zone here. Obviously it's not going to go backwards in time, so around sort of this area around here. Let's just make this a bit clearer. So Ohm is going to be a great buy anywhere around here. Will I be going back into it? No, I think there's too much uncertainty happening with its APR step down. So if you can see what's happening with Ohm on June analytics. So roughly mid-January, we're going to have the next step down in APR. So the APR is going to drop from sort of 0.15% down to 0.11 per rebase. Everyone's obsessed with APY, but you never get the APY. You should obsess with your daily rate. So for example, if we go to the top band here is what was it? 0.1587. So 0.1587 times 3. So 0.47. So really, Ohm's going to be going down to roughly 0.47% per day. That's the what you need to look at. Just chin off the APY. Everyone's so obsessed with APY. It's absolute bollocks. You're never going to get the full APY because it's always falling. So that's that. I personally won't be going back into Ohm, not for a while. I want that version 2 to get out properly, and then I'll have another look. But where does that leave us for time? Again, this is exactly the same sort of scenario. So we've broken. Obviously, it's annoying how we don't get much past data on Deck Screener. I guess we could have a look at the Coin Paprika chart. That'll give us a bit more stuff. Let's get rid of the volume. It's rubbish. There we go. Yeah. So you can see it broke the base trend line pretty clearly. Whichever line you draw, whether it's a bit further up here or down here, it doesn't matter. It's breached it. And then we've been 6-6ing it all the way down. So literally from when we really first started doing the first sidestep around 7,500, somewhere around this area here, I've doubled my token holdings. So yes, my equity price is gone. My equity value of my portfolio has gone down a bit, but I've got over 100% more tokens than had I just hodled. If I'd hodled, you'd be making roughly 9% per week. You definitely haven't gone anywhere near doubling. So and don't forget, I still get the rebases, because when I'm going in and out, I still get rebases when I'm in it for a few weeks or a few days or whatever. But unfortunately, we're still falling. So when we're looking at this base resistance level, it's going to be something like that. Time is not out of the woods until we breach this trend line. Whether it's going to be here or here or here or here, I don't know. But it's getting it's looking like a pretty good. Nope, I don't want to log into that. Let's go to not the stake one. Let's just go to the app. Come on. Sorry, ignore me. I'm being special. Wonderland. I've got it. Normally, I'm logged in, so I just want to go to the dashboard without logging into my MetaMask. It's not playing ball. Normally, I can. Screw it. Just put my password in. Hopefully, this will hurry the hell up. I should do this main wallet for now. Okie dokie, yeah. So if we look at this, the backing per time is about 1,700, and this has dropped quite a lot. So when you're looking at, really good investments, this is really good. This is the book to price value. So if you do 3,101, divide that by 1,704, it means the premium has dropped to 1.81 times, which is absolutely fascinating. That's amazing. If you were to compare that with Olympus, Olympus, I would say this is better than Olympus. Oh, pretty close. So what was it? It was 1. If you times that by 100, whoopsie. So it's 181% of premium. So this is 392 divided by 108. Yeah. So time is actually a much better investment than Olympus when you're looking at price to book value. It's got a longer runway. Treasury isn't as much. They both had a hammering with the Treasury. Yeah, it's there or thereabouts. So yeah, I'm still really bullish with Wonderland, and yeah, after this video you're probably going to see another video about how trading really does not hurt the protocol. In fact, it helps because all of the trading fees go to the protocol and therefore the Treasury. Right, see you soon. Don't worry, this is just a little tree shake, and I'll see you soon. Bye.